and this low is the same right here. Okay, so then as it pushes up, what you've got to do is look at, does the range start to expand? And you've got to also realize that sometimes you're just going to be wrong, folks, and the market's going to fool you, and you're going to think you should go long, and you're going to go long, and the market blows right through your entry price and your stop. That's just part of trading. So as the market is coming down, there's the Fibonacci retracement. Let me try and expand this out. You know what? Let me just open it up, since we all know what we're looking at. So you can just ask yourself, as it's coming down to the 618 level, do you see momentum expanding? And the question is, well, not really. But then as the market gets down here, do you see the range expanding? Yes. So could you at the very least get out with a small risk? That's 12 pips. Okay? Yeah, absolutely. So if you enter, if you're getting in here on the Little Dipper, and meaning you see the price move up, you see it move down, you don't wait for a 3-bar reversal, you just have an order waiting here at 99.78, could you conceivably get out at the 786 level? Sure, you could. Another way to avoid having this happen, where you go long here and the Little Dipper turns into the sneak attack, which is exactly what happened here, you can wait for a 3-bar reversal up here. That's the whole point of a 3-bar reversal, is it forces you to wait for the market to slow down. And unless the market slows down enough, which actually over here you barely eked it out, 1, 2, 3. Okay, so the market comes down, 1, 2, 3, it prints 4 bars. Now you've got a breakout point. Okay, so there's a 3-bar reversal. As soon as this bar closes, you count back 1, 2, 3, take the highest high, there's your breakout point. You can avoid having a Little Dipper turn into a sneak attack on you by using the 3-bar reversal. Okay, last one. Stephen J. says, today I called Interbank to ask about their bid-ask spread and how that affects my trading. I'd like to give you my understanding of this and see if I'm thinking correctly, so when I start trading I get the results I want. Trading the pound dollar and using the bid prices shown on the chart and thinking back to today's trading video, I used the possible long entry price you used of 99.44. Now remember, there's a lot that went into that long entry price. Okay, so before I continue reading this, I'll continue reading it. First, if I understand Interbank correctly and I just use the raw numbers you suggested, enter 99.44 as a long entry point, the price would actually have to hit 99.48, assuming the 4 pip spread they show. Okay, now I will stop here. Stephen, you did not listen to the whole video. And I can tell that just based on the way you're wording your question here. There's quite a bit more to it than that. And like I've said before, you've really got to pay attention. I didn't suggest entering right in at 99.44. And if you go back and review it, there's a 12-minute video explaining